All right, hey everyone. I just finished off some Monday morning research calls, and again, because we're in severe times, I wanted to just kind of open this up for everyone to see sort of what we're going through here on the front lines, and kind of just give you some insight as we're going through things. I wanted to just address an important point that everyone's asking: where's the near-term tradable bottom? And we still think we're obviously closer now than we were 3 weeks ago. That's a stupid thing to say, but just it's obvious. But what we're doing right now is we're going through the shock phase, and the shock phase, I don't know how much longer it'll take, but it can stop very abruptly. And right now, and when I say by shock phase, everyone's working from home. That obviously is a big shock to the system. People are just fearful. It's a very scary situation that we're in right now globally. But I think once we're over that, and again, I don't know when that runs its course. It could be days from now. It could be weeks. I don't exactly know. Once we're through that, we could have a tradable bottom. But I think what's important to understand is that the tradable bottom is not, in my opinion, our opinion, most likely not going to be the bottom, because then there's a second wave once the economic reality kicks in. Once we hear from guidance from companies, governments, we're gonna probably see another wave of selling, which could take equity indices quite a bit lower. And that ultimately is going to be the bigger picture bottom. So I think one of the bigger risks that we're seeing, we're hearing a lot of people that are still wanting to sell. So I think rallies are going to be capped to, bear market rallies are sharp. 10-20% is easily possible, but I think then there'll be the sellers are higher, is basically what I'm trying to say. But we're also hearing from a lot of value buyers and people who just love to buy things very cheaply, which is of course always a great strategy, that they're buying and they have been buying. And I think given where we are in the credit markets, a lot of these people may be getting in too early. Now, I know they have different time frames, so if they have a 10-20 year time horizon or a 10 year, then it may not be so important. But still, I think there's a risk here of trying to catch the falling knife on the longer term, from a long-term perspective. Selectively, there's always opportunities, right? But in the grand scheme of things. Now, when it comes to the more near term, what we need to see, in my opinion, to see things in order for volatility come down and at least get a tradable bounce in equities is the following. And what I did here is I took two tickers. One, the blue line is the volatility of bonds, long-term U.S. Treasury bonds, and the orange line is the yield in longer term bond yields. And you can see yields going down, has been going down, which basically means prices be going up in bonds, but the volatility is very high. So we're seeing basically historic volatility, wide bid-offer spreads in the bond market, and I think that's something we need to watch very closely, because once that starts to come off, it'll probably also coincide with the peak in fear, at least from a near-term market perspective, and potentially also a top in the VIX, which is the S&P 500 implied volatility index. So let me just quickly peel this back a bit so you guys can see, and I can see if I can make this a weekly chart. I don't know if that makes a big difference. Yeah, because these ETFs haven't been around for that long, but you can see at least going back to 2015, obviously there's a very big spike in volatility. Anyway, so that's what we're looking for. Again, we think tradable bounce probably pretty soon. Can be a few percent, can be 10, 15%, 20%. I think we did a video last week on the pivot levels in the S&P 500, the Fibonacci retracement levels. So maybe check that one out. But again, I think there's two phases here. Phase number one is the shock phase, which we're still in, and until that subsides and ultimately, again, volatility in the bond market comes down, and also the VIX, we can't have a tradable bounce, but then there will be that tradable bounce opportunity, and ultimately I do think again we could see lower prices as the economic fallout becomes more apparent, and we see another wave of selling. And then I think at that point, and again we'll update you guys here, and certainly if you're a paying member, you'll be updated as you are every day. Then I think then there will be longer opportunities. So anyway, guys, if questions, comments, feedback, leave it down below. Subscribe to the channel, share our channel everywhere you can, and hope it's helpful. Talk to you guys soon.